All right, hello everyone, and welcome to today's weekly market check-in with myself, Greta Wall, and Derrick Oldensmith. Derrick is the leader of T3 Live's Pro Desk virtual trading floor and a professional prop trader with T3 Trading Group. Real quickly, just before we get into any market discussion, let's go ahead and look at the current positions that you are holding, Derrick. So again, he is a professional trader with T3 Trading Group, which means we just have to show these disclosures before we get into any discussion about the market. All right, so Derrick, our topic is ahead of Jackson Hole. So let's just kind of talk about this week heading into the end of the week, where kind of the focus and the main catalyst will be coming from. Before we get into that, how is your trading day going so far to kick off this Monday, this new week of trade?
It's going up a few bucks. I definitely still have long positions on. I'd be making a lot more money if I wasn't at the same time trying to come in on the other side of the market, really starting end of last week through today to have some heavier shorts on an index level, just because this move has been so far so fast at this degree of upside extension. It's traditionally a pretty good time to not be buying and potentially to come in on the other side of the market a little bit, but we have not been able to get the remotest of a pullback in this market into this up move. It's been wild, and in some ways I feel like this is the strongest market I've almost ever seen, and that's after obviously we just had our little freak out 2 weeks ago today, I think.
Mm-hmm. When we're coming off of that freak out, of course, and you have this kind of strength, what does that signal to you about the market and the traders that are in the current market?
Sure. So it's mainly just a lot of repositioning. If you remember when we talked 2 weeks ago, we discussed how that down move was really primarily positioning related more than anything, and the extent of the down move and the extent of the freak out, the fix up to 65. It was more related to positioning than anything else. And now as this market is moving back up, all that positioning that rolled off in the beginning of August, some of that was at the end of July, is coming right back in. Very quickly the market was worried about a hard landing, and now it's fully repricing in a soft landing. I mean, last week's economic numbers, the CPI combined with the retail sales number and the PPI, it was like as Goldilocks as you possibly could have gotten. So any increase in recession fears is now all the way back down. It's becoming less and less expected. And one of the things that I was talking about to my team last week is that positioning washouts are very bullish, especially when the market can start to go back up. If you remember, we had like a 5% pullback in April, and that in some ways was one of the most bullish things that could happen, was because it washed out like extreme long positioning. It got it back to a little bit more neutral. And then by the time you're back at extreme long positioning again, you're actually trading at a much higher market level price. So even all the way back up here at SPY, almost 557, what I'm looking at right now, the long positioning in the market as a whole, especially from like the systematic funds that are out there, has not gotten back to where we were when we were at 557 back in July, even on the way down. So you just have a big rush back into positioning, and you've got a big vol crush as just the systematic vol selling just came right back into the market out of VIX 65 that was able to bring us all the way back down to a VIX 14 handle. Once again, the only thing that's surprising me is just the speed of it. This hasn't been an uptrend to get us back from SPY 510 to 556.50, $45-$46 move now, at least not on the daily chart. It's just been vertical. Been vertical straight up, which that's not my definition of an uptrend. That's just pure momentum that's been coming back to the market. So I think that we are a little bit stretched here, and that's why I've been trying to come in on the other side the last couple of days while still maintaining my long positions. But the trade has been very difficult. So while I've managed to still eke out some pretty consistently green P&L, I've definitely held myself back a little bit by trying to short these indexes a little the last couple of days. But I'm sticking with that trade. I mean, there's still a lot of upside extension here. This is not a market that I want to be buying. And then we've got catalysts still coming up, like you mentioned, Jackson Hole, and then we got NVIDIA the following week.
When we're looking at Jackson Hole coming up at the end of this week, the Fed, like you mentioned, has kind of gotten everything served to them on a silver platter with this Goldilocks, soft landing that seems to be like it is going to happen so far by the data. Do you think that gives the Fed more room to not delay rate cuts? Because I think the rate cuts are coming, starting in September, kind of no matter what, but give them more room to say, we weren't too late, we're on the right track, and we can do this slowly and not have to ramp up any rate cuts in the future.
Sure. Well, they should have started already, in my opinion. But
Mm-hmm.
I also think that they're only going to cut by 25 basis points, which the market has started to price in, at least to some degree, 50 basis points. And when you and I spoke 2 weeks ago on the freak out day, when the market was going completely insane, people were calling for 75 basis point emergency cuts plus 50, 75 basis points in the September meeting. And I was saying to you even 2 weeks ago, when the market was much, much lower and things were looking a little bit more dire, this just isn't how the Fed operates. The Fed likes to go slow. They like to take their time. Unless there's an emergency. If there was a true emergency, and there's definitely not, if there's a true emergency, then sure, then they can come in and do an emergency cut or something like that. But there's no emergency that's out there. The Fed is definitely becoming a little bit more focused on the employment part of their mandate and a little bit less focused, I think, on the inflation part of their mandate. Though obviously both have been very in play recently. So I think that gives them enough cloud cover, just the little bit of an uptick in the unemployment rate, to give a 25 basis point cut in September and finally get this started. But my concern is that the market right now is still overpricing in the probability of more cuts this year than the Fed actually has signaled that they will do. But we'll get a good look at that on Friday with Jerome Powell at Jackson Hole, I think. And I think actually the risk on that is to the downside, that he comes out a little bit more hawkish still than the market might be expecting. But we'll see.
So leading up to Jackson Hole this week, there's not a lot of other stuff going on. Somebody asked in the comments, when is Jackson Hole? And into this week, Powell's speech is on Friday. Oh, it's your birthday. Well, maybe it'll be a good day.
They seem to do that almost every year on my birthday. I think that the Fed likes to celebrate my birthday. They always invite me to come speak with Jerome Powell, but I can't quite make it most of the time.
Can't quite make it.
Busy, yeah.
A little busy there in New York. All right, it's Friday, August 23rd. This Friday is when Powell kicks it off, and then it lasts through the weekend, the Symposium with several other speakers as well. But the big one is, of course, Powell on Friday. So, we're kind of leading into this like end of week catalyst with not a ton going on heading into the week, but we are getting some retail sector earnings this week. Are going to get Lowe's, Macy's. I don't think Target is this week. I think they're next week.
They're this week. Oh, pretty sure they're this week.
I was looking at the calendar and maybe I missed them, but lots of retail sector earnings, which I think is an important sector when we're talking about the health of the economy. What are you focused on as a trader in any of those reports, if at all?
Yeah, so we'll see how these reports go. The Walmart report last week was one of just several factors in kind of the Goldilocks situation that's propelled this market so much higher. The retail sales combined with the Walmart earnings. So you can see that most retail names have actually given pretty big up moves here the last several days. Macy's is up pretty big. You even see some of these pretty broken charts, like a Lulu catching a little bit of a bid and attempting to break its downtrend, or Nike, which obviously coupled with some news was able to break back up and kind of get into its gap on the daily chart. So it'll be an important week for these retail stocks, and based on the retail sales number and based on Walmart's earnings reports, they're pricing in better earnings now from the other retail players. So it makes them it a little bit more difficult, I think, for these names to continue up after their reports, because now there's an even higher bar for just how good those reports have to be following Walmart. So we'll see how it goes, but it'll be a continued important look into the strength of the consumer.
Mm-hmm. When you come into a week like this, where the recovery rally is just, as you mentioned, just straight up and continuing, what are some of the setups that you're looking at as a trader? We could go through some charts or
Sure. So I still think that nailing, and this has been the way for the last couple of weeks, nailing the indexes is the key to nailing individual stocks right now. Correlations are probably starting to drop down a little bit on Friday and today, but it's not anywhere near what it was like back in June and July at this point. But generally, the correlations dramatically increased in that down move, and we're still seeing all the indexes and most of the stocks kind of trading together. So I've been taking a very heavily index focused approach right now to try to figure out my stock decisions that I actually want to be involved in and how I want to trade them. And the bottom line is, I think until the market resets up off of this extension, there's not much to do here on the long side. I don't care if the market goes up. The S&P's up 5%, 0.5% right now. I don't care if it's up on 0.5% today, 0.5% tomorrow. My rules dictate that we are in an area that's a very poor risk reward to be buying until the market resets up. I mean, again, we just had this insane monster move from 510 to 557 in the SPYs over the course of just a 2-week period of time here. You could certainly make the argument that we didn't belong at 510 with that degree of massive downside extension, but now we have a very large degree of upside extension. So just the way that markets work is markets work in periods of expansion and consolidation over time. And while the consolidation periods can be a little bit boring and sometimes a little bit frustrating to trade, they're almost a necessary evil because they set the market up for the next expansionary period. So when you're deep into an expansionary period with the market like we just had right now, again, just such a huge move, I don't think that there's too much to do until the market actually gives you that reset up. And then we can analyze, is there a higher low? Is there a bull flag? What's the tradable pattern? What's the risk reward off this? But when I'm looking at the SPYs at 557 with an ADMA at 546. So you got $12 of extension to the upside off the ADMA and the SPYs. That's historically a pretty large amount. And on top of that, it's a move after from 510 to 557. I just don't want to be, the last person who's buying this expansionary move higher, which, luckily at the very bottom there at 510 on that Monday morning, I was shouting from the rooftops that we should all be buying. So if you still got longs from there and you've just been riding the up move because you've got good reward maximization strategies from good game planning, that is absolutely the way to do it. And then into these prices, I just think it makes sense to, do the old trim and trail technique on those longs, put some money in your pocket. I continue to sell out some of my longs as we move higher. And then if you're a little bit nervous about this extension like I am, then it may make sense to, get some short trades on at the index level while you wait for the market to satisfy this upside extension. And that's pretty much where my head's at. And anything I do on a stock level is based off that thought process of just where the indexes have come to at this point.
Would you say you're trading a little less actively right now as you're kind of trying to keep yourself from getting trapped in this up move?
Today a little bit, but I wouldn't say that overall, just because I've been, again, building into the short side to hedge myself a little bit and get these trades on. If I hadn't been doing that, then yeah, I would be relatively inactive the last 2.5 trading sessions or so at this point. But I've been trying to come in on the other side and have some IWM short, have some Q short. Day traded Nvidia short a couple times today. Day traded Tesla short. So I'm trying to put those trades on just to make a few bucks off of a satisfaction of this upside extension. And at the same time, if we get the price correction to the downside, I'll still have those longs on. So having the shorts on, just helps keep my P&L a little bit more steady. But again, for the most part, all it's done is cost me money the last few days. But I'm sticking with the trade for now. It's following the game plan.
So you said, would you say you're building out some like longer term shorts that you're holding and waiting for the catalyst to move lower?
They're not longer term. They're just literally meant to be held until the upside extension that I'm looking at in the market is satisfied, which how long of a hold that is depends on how the extension is satisfied. If it's more through time, like it was on Friday, and to some degree it has been today, time with a little bit of upside grind, then I'll end up being in these shorts for a longer period of time. If somehow it almost seems impossible to even think about the market pulling back for more than 5 minutes at a time right now with how strong we've been the last few days. But if somehow we do get a pull in this market, I'll be rapidly covering. If the SPY can see the upper 440s, which is like a $8 downside move from here, I probably will have very little of my overall short positions that are left. But that's an if on a price correction, or if it's through time at a certain point as extension gets satisfied through time, because those are the two ways in which extension can be satisfied, either through time or price. If it's through time, then I'll probably be in the positions a little bit longer. I'll start slowly piecing out of them, and I'll probably lose money, to be honest. If it's price, then it'll make me money. But I probably started on these shorts a little too early and a little too heavy in hindsight, but it is what it is.
What are the mistakes you think traders make in moments like this in the market? You look at a market that is so far extended to the upside and you say it's got to go down, but it doesn't. And, it just keeps grinding higher. What would you say are the mistakes that some traders make in these environments, and how can you navigate it better?
Sure. So I think that there's two main mistakes, and it's funny because they're like opposite mistakes. One mistake is chasing price. Again, I don't care if the market finishes up another 0.5% today or even another % today. I don't think that it's prudent to be buying stock here, just based on what I have seen historically, and that's all that actually matters. In an individual circumstance with the market or with the stock, literally anything can happen, and if you trade long enough, anything that can happen, I really think will happen. But I think that if you are buying this setup like right here, right now, in this moment, maybe it makes money this time, but I think that 9 times out of 10 it doesn't. So I think that chasing price after big moves is generally one mistake that traders make. They get FOMO or whatever. Oh my God, the market's up so big. I was wrong. I gotta buy now. I gotta buy now. That's usually a mistake. And then the other one is becoming too stubborn on the short side, because you have to recognize the thing about momentum. Momentum's a hell of a thing. It literally means the higher the price, the greater the demand. Momentum is what creates extension, and it's what enables extension to become even more extended. So you can sometimes think like, oh man, I was looking at this market at SPY, 553, and it was really extended, and you would have been right on Thursday. And now here we are at 557, $4 higher. Maybe tomorrow I'm looking at this market at 560, 561. It's possible. I would say a lower probability, but it's possible. So, becoming stubborn on the short side and just saying that something has to work just because it's worked in the past can also be a mistake. So that's why game planning is so important. We put trades on based on risk reward and probability of success. That's the bottom line. And you have to manage all aspects of that formula. You have to manage the reward, obviously. You have to manage where the probabilities are based on what you're looking at. And probably most importantly, you have to manage risk, because, again, you do this long enough, you will find that literally anything that can happen in trading will happen, I think, given a big enough picture of time and enough scenarios. And even if, like I just said, I don't think it's a good idea to buy here, because maybe it's a 1 in 10 chance of this market being able to give further continuation from here in the short run. Well, guess what? That still means that there's a 1 in 10 chance that the market actually does give continuation. And if you're just stubbornly short and happens to be that 1 out of 10, and you blow yourself up because you're like, the market has to go down, Derrick said it was too extended, that is also a great way to hurt yourself. So it all comes back down to risk reward and probability of success. If you're chasing stock long here, I think that you're putting yourself at a pretty low probability of success, and it's a bad risk reward ratio. But if you're just blindly shorting here stubbornly on a boatload of leverage because it has to come back down, well, you might have a better risk reward and probability of success, but there still is a risk that trade fails And if you don't manage it properly and you're over levered and it happens to be that 1 in 10 or whatever, and you're stubborn with it, you can do a lot of damage to yourself. So I think that those are the two main issues, and they're actually on opposite sides, because one's a buying issue, one's a short selling issue.
Yeah. When you're looking at the market where we're at, you mentioned, how far extended we are from the ADMA. What are the key levels that you are monitoring as a trader to kind of figure out direction of where the market might go?
Sure. So the biggest thing I'm paying attention to right now is, and I don't know if you got the screen share up, but the biggest thing I'm paying attention to is how these indexes, namely the SPYs and Qs, to some degree the IWM, how they see this ADMA again. That's the biggest thing that I'm paying attention to. Sure, there's some upside important levels. We actually broke them. This 555 was really important for the SPYs. We're $2 above it right now. I mean, what else is even out there? It's a little bit of resistance at 560 and then all-time highs at 565. There's not really too much that's out there as far as like upside resistance levels anymore. The biggest thing I'm just paying attention to is the degree of separation between where this market's currently trading and this ADMA. We can continue higher, but at some point, the price and this moving average are going to have to touch. And the more extended that we become away from that, the lower the probability that we can continue to extend. So do we pull back at a certain point and retest that level as it moves higher? Do we go sideways at a certain point and this moving average, works its way back up? I think that it's difficult to expect at this point more than a healthy correction, which is all that I'm looking for, without a market catalyst actually triggering an increase in the VIX again, increasing volatility again. And I don't think that's necessarily something you want to bet on. While I do think that the risk to, again, Jerome Powell and Jackson Hole on Friday is to the downside, because I think that there's a probability that he's a little bit more hawkish than the market expects, you would really need like a vol event at this point to come back in to actually break this market from more than just an extension correction. So that's the biggest thing I'm looking for. It's the biggest level I kind of care about, if you want to call it a level. It's just this moving average. And then after we're no longer extended, what at that point is the actual setup in the market that I want to be involved in is the question. So we'll see.
All right.
As we break new highs, as we break new highs right now.
Right. Do you have any other catalysts that you're looking at this week besides Jackson Hole and a couple of the retail earnings reports?
No, not really. I mean, this is traditionally the kind of the doldrums of the year, is the back half of August and the first 2 weeks of September. I mean, the interesting part about that is that liquidity is also very low, just because where we are, this is the time of the year where everybody's going on vacation. I'm going on vacation myself at the end of August, beginning of September. So there's just less liquidity that's out there. So yes, and there's not that much as far as events go. We have Jackson Hole and we've got NVIDIA, and that's pretty much all I think that really matters between now and the end of the month. I mean, there's a couple other interesting reports. Target will be an interesting report. I think we have Palo Alto Networks after the close today. Those are interesting reports, but I don't necessarily think that they're going to be like massively market moving.
When it comes to a time like August, where we're seasonally weaker, and then we're coming off that huge volatility event into really no volatility now, how do you change and adjust your trading and your mindset so you don't get stuck and trapped in trades that you shouldn't be in?
If this August period, which it sometimes does, was corresponding to a very slow market, then I would try to take a step back with my trading. But we haven't had a slow market. We've had an insane market. So this is actually a market that I want to be trading. So I'm not doing anything different, because this market's been giving such big moves. This August has like more trading opportunity than most Augusts that I can remember. We just went from, it's only August 19th. Like we're a little more than halfway through the month. And this market, again, the SPY went from 555 to 510 to 557. I mean, there is movement out there, and movement breeds opportunity. So in this environment right now, I'm not doing anything different. If we were just in a very, very slow, boring August period, which maybe we morph into that, then I'd be like, okay, let's, this is the tough part of the summer. Let's just get through it. Sit on your hands. Preserving capital is a position also, and that would be the goal. But that has not been this August. This August has been wild.
All right. Well, if you would like Derrick's, oh, that is not the right screen. Hold on. There we go. All right. So for everyone who's with us live, if you want to learn more from Derrick and how you could possibly work with him, you can go to t3live.com/do live to get his free prop trading ebook. Again, Derrick is a professional prop trader with T3 Trading Group. And so this book will give you more information about the benefits of being a prop trader like Derrick himself. And Derrick is a real trader. He's been trading while we've been talking, I know. So I'm going to let him get back to that for the rest of the day. And we'll be back here in a week. Have a great rest of your week, Derrick, and happy early birthday to you if you and I don't talk again before then.
Thanks, Greta. I appreciate it. Talk to you soon.
All right. Bye.